Hi, welcome to the Market Alert for Monday, the 11th of December 2023. So on Friday, following the release of the NFP numbers, cryptos jump, commodities dump, yield curve slumps, and apparently it's summarised as a Goldilocks week. Rate cut hopes are dashed. So here we go. We've got this vacillation from we're going to cut, we're not going to cut. So again, it'll be interesting this week, and I'll explain why in just a moment. Stocks shrug off higher yields on strong jobs report ahead of CPI and FOMC. Well, there you go. You've just been told what's coming. That's the CPI numbers, and they're out tomorrow. Today we don't have anything. Let's just refresh this. So we've got a 10-year bond auction. That's not any news really. And the main event for this week is going to be over and done with. Tomorrow is going to be the core CPI numbers, and they're forecast to actually drop by 0.1%, and the same for the core CPI and the month-on-month also. They're showing no change on this one, which will be interesting. Smoke and mirrors, as it's known in the industry as CPI. Prices are still rising, we all know that. And again, it's just a matter of papering over the cracks, making it look okay and massaging those figures. So let's have a look at the market's reaction to the NFP numbers on Monday, on Friday. If we just go back to Friday, get the right dates. Let's have a look. Non-farm payroll numbers. They came out at 199, forecast 184, and up from 150 the previous month. Okay, let's have a look at the market's reaction to these numbers, and we'll kick off with the Dow. So in the Dow, you can see we've got another up day. We'll break through this tomorrow, no doubt, when we get the numbers. If not today, it's time the market actually broke through this and headed back to those all-time highs that we see in the monthly chart there. If we just expand this out a bit so you can see where we're actually heading. The Dow is the only market to not have made a new all-time high at 36 at 952, but it's heading that way. You can see exactly what it's going to do there. Be very surprised if it doesn't. So on Friday, the market moving back up, and in the 30-minute chart, you can see trading down to the low there, up, back, and then finishing on the highs. The market hasn't gone through Friday's highs just yet, but you can see it's finding support at the close of Friday there. In the German DAX, we've also got the market moving higher. It's what you call a parabolic move here, and we do have the parabolic on there as well. You can see it's just the odd red one, otherwise it's a parabolic move to the upside there. Without a doubt, the true definition of a parabolic move. In fact, what would be interesting, just to have a quick look, just remind ourselves of how many points the market's actually piled on since the low back at the beginning of November, and to today's. We'll include the overnight there. We're up 2,231. Which this market needs some sort of a pullback. Maybe we'll get that today as there's not much news. But on Friday, going back, you can see that we had a full 100% retracement before the market moved higher on the NFP numbers. Interesting here that they took out the stops down here. Anybody that bought in early in the morning session hoping that the market would rise, they brought the market right back down to this area, the low and the close of the previous day. Took out the stops and then moved the market up 150 plus points. Overnight, the market has traded through the high, which we can see, and is now stuck in a sideways range at the moment for the German DAX. In the S&P 500, we remain in the sideways move, but we did take out the high of the recent high, as we can see here. Let me just draw this in with this tool. So 4599.5 was taken out, and now that seems to be a bit of a support for the S&P 500, which you can see there. Again, we've been up to the high of Friday. We sold off and then brought the market straight back during Friday's release of the NFP numbers there. So the S&P up, in the FT 100 also up, breaking out of that sideways market. As we've seen before, we talk about the ascending triangles that we've seen in these markets over the last few weeks, and the market breaking through the 200 MA as well, sitting on this at the moment. And the 30-minute chart, you can see again we've got that classic retracement, oversold, volume in, market up, then retracement, and at the moment sitting on the DP and coming off that and then above the close. So there's no reason why this market can't continue to move higher. During today we may get a situation where we get a bit of a shakeout to begin with. Let's have a look at the US dollar. US dollar up on Friday in response to the release of the NFP numbers. Market sideways though at the moment. Let's have a look at the metals, see how crushed they were on Friday, as I said they would be. So let's start off and have a look at silver. Absolutely battered. Came through the 200 MA as I said it would. We're not finished going down on the lows. We're going way below $20 an ounce because they are determined and hell-bent on keeping these numbers low as possible. And there you can see it wasn't even the NFP numbers. They just crushed it from the start. Below the DP, and then off we go. We know we're at the low at the moment, but we won't be by the end of today. I suspect we're going to get another move to the downside. And if it's not today, it'll be tomorrow in response to the release of the CPI numbers. On the other hand, gold's doing spectacularly well. It's holding. It's just coming back below $2,000 an ounce. Again, told you they'll get it back below this. They will certainly get it back below this if they can, just to make it make it possible for the central banks who've been buying more gold than they've ever done since 2011, so that they can add more gold cheaply to their already extensive holdings. So there you go. You see gold being crushed there and moved lower, and then bouncing a bit off Friday's low. But it'll go through there. Anything to get it below $2,000 an ounce is key here. And the pattern continues. As I said on Friday, we're going back up to 88 into this area and then on to 90. And where did we go on Friday? Look how much they crushed it. And I showed you the times before where they've done this. This is going a lot higher. I wouldn't be at all surprised if we don't end up back in the 90s and up into 92, to be honest with you. Once we get past this, they're going to keep hammering the price of silver. As I say, there's a manipulated market. It's blatant. It's absolutely blatant on the way that they manipulate this market and keeping the price suppressed. When it should be in the region, if you actually take the 1979, 2011 figures, should be in the region of around $600 an ounce, but it's not. It's a measly $21, I think, isn't it now? Where are we for Friday? $23. We're certainly going down to $20, as I keep mentioning every time I record the alert. This is the monthly chart of silver. You can see how it's stuck in this sideways range. My fear is that it's going to break to the downside. It's not going up. It's not going to be on the upside. You can see what they've done there. They've taken it back to the top of the sideways range, and now it's a matter of breaking it out to the downside. And over here, the last low that we had came in at March of 2020 at $11.56. We've also got one here that's $17.54. 17.54 is broken. We go down to 11.56. Okay, let's have a look at the basic trades for Friday. There was only one. It came late in the afternoon because the volatility of each individual bar is very, very small at the moment. The range continues to be constrained. But let's have a quick look nonetheless. So on Friday, I don't have the full recording because I went away for the weekend, but you can see that market was shaken out to begin with, then moved higher. And again, today, I would be surprised if we don't get a bit of a shakeout first and then move prices to the upside. They became quiet. We had the release of the non-farm payrolls, which you can see there down to the DP. The buying came in and then they brought the market back, and then it continued higher as soon as the market opened there, and then just the one trade there of 12 points at the end of the trading session there. Let's have a quick look at the overnight markets for the German DAX. And in the 2-minute chart, you can see that the markets are fairly sideways at the moment. It's not doing a great deal. You can see there we had a bit of a sell-off early hours. Not a great deal though. Let's just have a quick look, see what it is. It's nothing major. And from there down to the low, it's just 49 points at the moment. And in the daily chart, as we've already seen, we've taken out Friday's high. We've got a new high. That high of this morning which is back in here. This one here, let me just draw it in for you, also needs to be taken out. So that's the high. Let me just reset the chart. And you can see there 16,820. Now, interestingly enough, talking of psychological levels, this market's only got 180 points to 17,000. So that's probably likely to be its target and its top as its new all-time high. So keep an eye on the upside. I would rather be long than short this market at the moment for the obvious reasons. Okay, that's it for this one. CPI numbers tomorrow. No news today. Market can trade sort of have a bit of a sell-off to start with, unless it's already done that with the overnight drop in 50 points. And it's just a matter of bringing it back above this high that we see here. And then the overnight high, which will be, if it's not broken during today, will be obviously the high of Monday. Okay, that's it. Let's see what happens, like I say, and as ever, thanks for watching. See you in the next one.